Trump has surprised everyone with massive tariffs on trade. Everywhere you look in the media, you are seeing fear and panic. But is this actually warranted? Here, we focus on the numbers. And if you look at any conversation on this subject, you will see a lot of feelings. Zero data. Today, I am going to break down the actual data. Then we will review the economic impact from a data standpoint. Then we will find opportunities to invest and make money. 15% plus drawdowns in the stock market are always good times to make money, not a time to panic. Let's review the tariffs. Tariffs country breakdown. The first thing I have seen people do when reviewing the list of tariffs is to try to get a gotcha. I have noticed this a lot with the media. The first instinct is to assume Trump is stupid. I admit, I fell into this trap myself at one time. However, I have since learned to slow down and review. The main gotcha I have seen the media try to get on Trump is the insanity of the list. Every single area of the world is tariffed. This includes Heard and McDonald Island, an island with 0 people on it. My first instinct is to laugh at the absurdity of it. However, is it really that absurd? One thing with tariffs or any type of tax is that companies will always try to find a way around it. This is actually why I myself don't normally pay attention to tariffs. There is always a workaround country that minimizes the impact. Today, however, is the first time in a long time that a tariff has been enacted globally. I believe this is part of the reason the stock market is reeling. They do not have a playbook for such an action. The second gotcha I have seen people mention is that Russia is missing from the list. This seems like a gotcha, especially when the media tries to pretend there is some connection between Trump and Putin. However, this list excludes other countries as well, such as Canada and Mexico. It also excludes North Korea. It seems the reason is less sinister, and that the reason countries are excluded is because they have already negotiated with Trump, or they are already so heavily sanctioned it is pointless to even put them on the list. The next subject is far more contentious: tariff rates and amounts. The rates Trump has picked has sent people into a turmoil. Trump has an extreme worry about the trade deficit between the US and other countries. This is weird to those in business, and I will explain why. A trade deficit is the amount you purchase from a country, imports, subtracted by the amount a country purchases from you, exports. Pretend we are country A, trading with country B. Country B makes food and sells it to us. $10 billion worth of food we buy a year. We would have a $10 billion trade deficit with them. Now let's say we export to them a streaming series like Netflix in the same amount of $10 billion. This should be a trade deficit of 0 in a perfect world. However, the world is not perfect. What actually happens is country A creates a subsidiary company within country B's borders. As a result, the revenue is recorded within country B's borders and has never technically crossed borders. Thus, country A has a $10 billion trade deficit on paper, but in reality, it is 0. This is why people in business find it weird to base the tariff on the trade deficit on paper. I have created a chart here to help you more easily review the tariffs. If we use Cambodia as an example, similar to our country A and B scenario, Cambodia has a $12 billion trade deficit. We primarily purchase clothing related goods from them. We don't export anything to them. However, in reality, they most likely use our digital services. Thus, the trade deficit between Cambodia and the United States is probably smaller than the $12 billion seen on paper. I hope you have a good understanding of trade deficits now. It would be odd to base your tariff rate on this. However, rather than call the Trump administration stupid, as so many on the media have, I have decided to just analyze the impact of the tariffs first, and then see if they will bring countries to the negotiation table. One thing I try to do with geopolitics is ignore the given reason why people say they are doing things. Everything is a chess move. So it's better to see what the actual effect is and analyze that rather than focus on the words being said. On this table, we have country, tariff percentage, how much the United States imports from the country, the trade deficit, how much the United States exports to the country, the calculated tariff amount, the GDP of the country, imports as a percentage of that country's GDP. This measures how important this is to their economy. Next, we have imports as a percentage of the United States economy, which measures how important this is to our economy. Finally, we have how large the tariff impact is on their economy and how big of an impact it is on the United States economy. Cambodia and Vietnam are the first countries to reduce tariffs on the United States. If we review our chart here, we can clearly see why. Imports to the United States are 40% of Cambodia's GDP. The proposed tariff is 20% of their GDP. There is no way Cambodia is risking this, and thus they have capitulated right away. Vietnam is similar. Imports of Vietnamese goods to the United States is 30% of the Vietnamese GDP. They also can't risk this as tariffs are 15% of their GDP. We then have the countries in blue. U.S. imports of goods from Malaysia and Thailand are above 10% of their GDP. Thus, I expect these countries to be the next to capitulate. Next up, we have the countries in yellow. These countries are heavily dependent on the U.S. for its military bases and military funding. Thus, I also believe we will see capitulation from these countries very quickly. China, in red, has already decided to engage in a trade war. This leaves the countries in orange. Trade with India, Switzerland, Indonesia, and South Africa is relatively negligible. $200 billion is a lot of money in a normal circumstance, but relative to the United States economy, it barely makes a dent. The main countries to analyze are China and the European Union. United States imports of their goods represents 3.8% of the United States GDP. We import $1 trillion of goods from them. The issue for them is we only export $500 billion of goods to them. This is actually a main issue the media is not reporting. Reciprocal tariffs won't work because they are far less impactful. We have less goods for them to tariff. I expect the European Union to capitulate because of Germany. Germany is almost 25% of the European Union's GDP, and they are already in recession. Germany is an export driven economy with a trade surplus of $100 billion. Germany cannot risk further erosion of their economy and will pressure the European Union to get in line and remove the tariff barriers. Already, Italy is pressuring the European Union not to retaliate as well. This leaves us with China, who has already reciprocated with tariffs. I expect this is because of China's internal struggles. China is struggling with the middle income trap. This is the concept where a country is able to grow their people's incomes by manufacturing and physical labor, but is unable to transition to higher level services. China is hoping that they can utilize this conflict to inspire their people to focus internally rather than on exporting to the world. Now, let's analyze the impact of tariffs as a whole. We can see that for every country, the impact of trade is more important to that country's GDP than it is to the United States GDP. Focusing on the top row, which summarizes everything, we can see that tariffs are 2% of the US GDP. It is nowhere near the massive inflation people are suggesting. If we assume everyone did reciprocal tariffs, that would be less than 1% of the US GDP. This is because reciprocal tariffs are placed on US exports, and we have far less exports than we have imports. The impact of tariffs on the economy is massively overstated. Imports represent 7% of the US economy. Placing a tax on only 7% of the economy is not going to change much of the American economy. America is an extremely insulated economy. Despite all the talk of outsourcing, we still generate most of our GDP within our borders. Stock market impact. The stock market has not enjoyed the announcement of these tariffs. The crash has been deep and severe, with the S&P down 18% from all-time highs. However, this is way too extreme. Just look at a chart of the S&P. Every time we have a severe drop, it rebounds. Drops that are slower are ones to take more seriously. But when a drop is this severe, it is normally emotion based and not to do with rational analysis. Imports are 7% of GDP and exports are 3% of GDP. Combined, they are 10% of the GDP of the United States. There is no reason why the S&P should be dropping 18%. The tariffs are only 2% of the US GDP. There is no reason why the reaction should be this severe. I expect a rebound. This isn't to say there couldn't be an eventual downturn, but stocks don't just go straight down. It's odd to me that we can see this historically, that it never happens, yet this is what people fearmonger to the public constantly. There are lots of stocks on sale right now at great prices, but I will mention three now. Meta has dropped to a forward price to earnings ratio of 20. This is represented by the line in blue. This is quite cheap historically. You can see it is a one standard deviation below its norm, which is quite a huge drop. If you look down at the bottom, this is the drawdown from the peak. Large reversals are buying opportunities, and Meta is a great company to purchase. Google is the next one that represents a great opportunity. Its forward price to earnings ratio is at a 10-year low. This is from a company still growing net income at a median rate of 20% annually. This is incredibly cheap for a high growth company. Finally, we have Nvidia. Nvidia is the AI champion. It is now at an extremely cheap forward price to earnings ratio. This is a company that has had an insane growth rate of 25% a year over 25 years. It is truly remarkable, sustained excellence. And now that they have the tailwind of artificial intelligence and are selling at the cheapest value they have in a long time, it is a huge steal. Many are worried about the tariff impact on NVIDIA customers, but NVIDIA has complete pricing power. I have followed this company for 20 years now, and their customers always capitulate to their pricing. NVIDIA has 25% net income growth rate for this reason. Every time they raise prices, their customers just buy. Despite what people in the media say about competition and alternatives, if there were competition or alternatives, people wouldn't keep subjecting themselves to a company that raises prices fast enough to sustain a 25% net income growth rate. Conclusion: this tariff impact is overblown. Most of the time, this is the case with stock trading. You are waiting for people to make an extreme move and then you capitalize on their mistake. In reality, the values of companies are hard to drastically change. Even massive tariffs rarely impact companies that badly. The main issue I see is that this is not what people expected. Trump did not do what we would academically expect from our textbooks. However, I don't think anyone should have expected that. There is a reason why analysts and commentators rarely trade successfully. Analysts know what their textbooks say. The real world is not a textbook. You can almost be assured whatever they say in the media will not happen, as it is based on textbook academics and not real life. Another thing I have not heard people mention is artificial intelligence. Imports have mattered for America as it has allowed us to ship labor to cheaper countries and get cheaper goods. I do not believe this is necessary anymore. I actually believe these tariffs are meant to force manufacturing back to the United States. But this manufacturing will be based on robotics and artificial intelligence. I believe we can actually produce at least 50% of what we are importing at home, utilizing robotics and automation. However, I do not believe this future is possible today. I believe this would have been a better move to make 4 to 6 years from now. I actually believe that despite the opposing side's complaints about tariffs, if they are left in place, these tariffs will not be removed by the opposing side. I believe the opposing side will leave the tariffs in place. As manufacturing is moved back to the United States, I believe the impact of reversing this will be too devastating on the voter base. However, I believe the United States is about to become an even stronger superpower through artificial intelligence manufacturing. Wrapping things up here, I believe no one truly knows why the tariff calculation was done, and I don't believe it really matters. The effect is countries have a calculation to make, and they are unable to inflict pain on the United States to the same extent the United States can inflict pain on them. It is an interesting situation. However, I believe there has been an overreaction, and this represents a buying opportunity. What do you think? Let me know in the comments. Bye.